buying your first home in Australia in 2026, don't apply for a loan until you watch this. Doing it wrong could cost you tens of thousands in missed government schemes, or worse, a rejection that hurts your credit score. In under 9 minutes, you'll learn the schemes you must use, how loans actually work, hidden costs most people forget, and your exact 4-week plan. Let's go. Here's the reality in 2026. Property prices in Sydney, Melbourne, and Brisbane are still high. Interest rates have moved always. Check the current RBA cash rate, and banks are stricter than 5 years ago. But here's the good news. First home buyers are still buying. Why? Because they use the right strategies and government schemes. That's your shortcut. Let's talk about those schemes right now. Don't leave free money on the table. Here are the key schemes in 2026. Number 1, first home guarantee. Buy with as little as 5% deposit and pay no lender's mortgage insurance. That saves you $10,000 to $30,000 instantly. Number 2, regional first home buyer guarantee. Same 5% deposit, no LMI, but only for regional properties. Number 3, family home guarantee. If you're a single parent, just 2% deposit. That's huge. Number 4, first home super saver scheme. You can withdraw voluntary super contributions to use as your deposit, tax effective saving. Number 5, stamp duty concessions. These vary by state. In New South Wales, no stamp duty up to $800,000. In Victoria, up to $600,000. Check your state's rules. Key thing, each scheme has price caps and income limits. Check your eligibility before you apply. Now let's make loans simple. You don't need to be a banker. Principal and interest, you pay back the loan plus interest. Best for most first buyers. Interest only, lower repayments for a set period, but you're not paying off the actual loan. Variable rate goes up and down. Flexible but risky if rates rise. Fixed rate locked in for 1 to 5 years. Predictable, but you can't make extra repayments easily. Offset account, a bank account linked to your loan. Money in there reduces the interest you pay. This is a winner for first buyers. Redraw access, extra repayments you've made. Good for emergencies. For first buyers, go with principal and interest plus an offset account. A split loan, part fixed, part variable, gives you the best of both worlds. Next, use a mortgage broker. And yes, it's free for you. Here's why. Access to 40 plus lenders, not just one bank. They find which schemes you qualify for. They do all the paperwork. Lenders pay them, not you. And they spot problems before a bank rejects you. Don't just walk into your regular bank. A broker saves you time, money, and rejection. Pre-approval is your golden ticket. Here's how it works. Step 1, talk to a broker with your payslips, expenses, and savings records. Step 2, your broker submits your documents to a lender. Step 3, the lender checks your finances and says you can borrow up to X dollars. Step 4, you get a pre-approval letter valid for 3 to 6 months. Now when you make an offer on a house, you look like a serious buyer. No pre-approval, vendors won't take you seriously. Most people save for the deposit and forget these. Don't be them. Beyond your 5% deposit budget, another 3 to 5% for stamp duty, 0 up to over $30,000 depending on price and concessions. Legal and conveyancing, $1,500 to $3,000. Building and pest inspection, $400 to $800. Lenders, mortgage insurance, 0 if you use the first home guarantee. Otherwise, 2 to 4% of your loan. Title and registration fees, $200 to $500. Moving costs, $500 to $2,000. And an emergency buffer of $5,000 to $10,000. Rule of thumb, for a $600,000 home, you need a 5% deposit. That's $30,000 plus another $18,000 to $30,000 for hidden costs. Here's your 4-week action plan. Screenshot this. Week 1, check your credit score for free. Use a borrowing calculator. Research schemes in your state. Week 2, book a free broker appointment. Gather payslips, tax returns, and 3 months of bank statements. Week 3, apply for pre-approval. Cut unnecessary spending. Week 4, get your pre-approval letter, start attending open homes with a clear budget. Then Find a property, make an offer subject to finance, get final approval, go to settlement, and you're a homeowner. That's your guide to buying your first home in Australia in 2026. Remember, use the schemes, understand your loan, get a broker, budget for hidden costs, and follow the 4-week plan. If this helped, hit like and subscribe, share this with a mate who's saving for their first home. See you in the next video.